Hello everyone and welcome to my first video in which I will talk about the best dividend stocks to buy in 2021 for both value and growth. Let's get started. But before we actually get into the video, I first would like to show you this chart I have over here. This is the chart of the Standard & Poor's Index 500. And you can see the gray area over here, which of course was the crisis we had from 07-08, and the S&P 500 underperformed over there, and it also underperformed in the dot-com bubble over here. Over here you can see the pandemic, the huge decline in the price of the S&P 500. But more surprisingly is the growth, how fast it is growing at the moment. So if you take the lowest point over here all the way to this point over here, we can see a 63.8% growth. And that's just way overpriced at the moment. Because if you take the orange line over here, which has a normal PE of 15, and the blue line over here, which is just the price divided by the earnings per share, you can see that it is trading way above that line, and in the past it was always around those two lines. So just be careful investing at the moment, I would say. So if you go back to the PowerPoint I created here, I would like to talk about the requirements I set before creating the dividend list I have for you guys. So I wanted each stock to be available at a minimum earnings yield of 6%. I wanted each candidate to have an investment grade of the Standard & Poor's credit rating of BBB minus or better. Once I will go over the stocks. I will tell you what credit rating of the Standard & Poor's grade, investment grade, belongs to the stock. Additionally, they each had to pay a dividend. Of course, this video is about dividends. Of course, they have to pay dividends. And the last requirement I set for myself was that they all had to have a forecast growth expectations of 10% or better. Next, I would like to talk about value and growth, so not value first growth, because most of the time in Wall Street you see all these analysts saying and asking themselves what will be the best investment style to apply to in the coming years. Will it be value investing or growth investing? But I don't actually agree with this, because I believe that all investing is value investing. And when valuation is not part of the process, then I would argue that what is being engaged is, instead of investing, it is speculation. And I'm not saying by any means that speculation is wrong. You can make millions of that. Take Dogecoin, take GME, take AMC. You can be a millionaire because of that, but it is not investing in the purest sense. And I always see this ongoing debate between value stocks versus growth stocks like it is a contest. To me, there's no such thing. All stocks grow and all stocks can be purchased at value. Therefore, I believe that prudent investors search for both. Even when capital appreciation is the primary objective, both growth and value should be part of the equation. And all the stocks I will be covering have aspects of value and growth. I would also like to talk about market value and intrinsic value, because most of the time people don't see the clear difference between those two. The market value is the value of a stock that you see on your chart when you look at them. Market value is simply a measure of how much the market values the company or how much it would cost to buy them. And intrinsic value is an estimate of the actual value of a company, separate from the market value, how the market values it. And I will, maybe in the near future, I will also make a video on how to calculate this, because there's certain method on calculating the intrinsic value of a company. And it's also important to see that value investors look for companies with higher intrinsic value than market value. And when that's the case, you consider a stock undervalued. Lastly, before we get into covering the stocks, I would like to talk about my investment style, whether that style also suits you, and whether the stocks I picked also suit your own investment style. Because one of the most important things in investing is knowing your own characteristics and knowing yourself. Now, I think that a return cannot be sought only depending on the investor's financial resources, but more on the knowledge, experience, and temperament an investor has. So first of all, all those stocks that I picked have a low risk level. Almost all these trade below the PE level, so the price of the stock divided by the earnings per share, and this will result in the stock being undervalued. And a stock is undervalued when it's approximately below 15 PE. And all the stocks that I picked still have good growth potential. All the stocks that I picked have a low volatility level. I will give you an example with ABBV over here. ABBV is less volatile than 75% of the US stocks over the past 3 months. ABBV's weekly volatility has been stable over the past years. And ABBV is also a stock that is on my list, and we will be covering that one later on. And the last one is my goal. My main goal was investing. That's always beating the S&P 500. When you take the yearly return of the S&P 500 back from the First World War until now, the average yearly return is 10%. And if you take inflation away from that, which is approximately 3% year over year, you will end up with a 7% yearly return rate. And the good thing about dividends, and that's why I like dividends, is because dividends almost make up for this inflation rate. Because if you have a dividend yield of 3%, you just cover this whole inflation rate. So that's why I really like dividend stocks. Okay, so over here you can see the dividend portfolio. You can see it over here. This is my personal portfolio. We might cover that later on. But let's click on review over here. You can see all the names that are added. You can see the names over here. So AbbVie, which we talked about earlier, Airlease, Ali, Financial, Anthem, Borg, Wagner, Citizen, Financial Group, etc. You can see the PE level over here, so the price divided by the earnings per share. The highest earnings per share level is, I think, yes, it is Citizen Financial Group, with a PE level of 16.21 of, Anthem over here, 17.13. It ain't really that high. With a normal valuation of a PE level would normally be around 15. And the EPS yield, you can see it over here. The dividend yields are over here, so the biggest dividend yield you can find is delivered by AbbVie, which I absolutely love. The annual dividend rates, you can see them over here. You can see the 3-year estimated growth over here. AbbVie, absolutely stunning. Once again, some others are negative, but these have specific reasons to be negative, and I will explain them later on in the video. But let's cover the first stock over here, which is AbbVie at the moment. So if you go in this program over here, you can see today total shambles, stocks correcting everywhere. So let's go to ABBV and then overview. And you can see the historic growth of AbbVie, which is just absolutely solid. It had a small dip over here towards closing of 70 from the high of 113. And I will explain the reason for this fall in a second, but I will just want to point out that this stock is just absolutely solid. It has a solid dividend yield. The dividend yield can be shown over here, which is 4.4%. The average volume in 10 days, short interest is 1.06%, which is not that high for a stock. You can see the news over here. Stocks that hit 52-week highs on Monday, and AbbVie belongs to that. It hit a high recently. And if you just go to ABBV, and then we go to revenue growth, you can see here that they have a very solid increase of revenue. So it starts here in 2010 and ends in where we are at now. and just every year they increase their total revenue, so from 17.83 all the way towards $50.2 billion. This is just absolutely stunning for a stock. Never a year off. It just went in sort of a straight line up. So you don't often see this for a stock, but it's just absolutely stunning. And if you still don't know what FV is, you can see here the description of FV. You can see here AbbVie discovers, develops, manufactures and sells pharmaceuticals in the United States, Japan, Germany, Canada, France, Spain, Italy, the Netherlands, United Kingdom, Brazil and internationally. So they are just a biotechnology stock. They have a market cap of 202.36, aka 202.3, it just changed. The total return the last 3 months is 11.8%, and the forward PE, so the price divided by the earnings per share, is 9.1. This is very low, so this shows us that this stock is actually considered undervalued at the moment. And like I told you guys earlier, I will explain why FV actually dipped in 2019. So if you read this first reason, which is international sales of FV's flagship arthritis medicine, Humira, dropped markedly in 2019 due to the launch of biosimilars in key territories. And if you go here, it will actually explain why this ain't a problem in the future. So they say the good news is that this allergen tie-up will immediately dilute Humira's overall importance as a source of top-line growth. Moreover, AbbVie also got the green light from the Food and Drug Administration for 2 new meds, Skyrizi and Ronfuk. I don't know if I explained or pronounced it correctly, but correct me if I'm wrong. Last year, and these 2 drugs are widely expected to become blockbuster levels products in short order, which should help the company smoothly transition into the next stage of its life cycle. So this shows us that this problem is a problem for the past and the forecasts are clean. So once we are into this program, you can see the ticker over here, ABBV, also over here. And this is the price correlated with fundamentals. And in the long term, fundamentals for a value stock will make up for the growth. So the price of a stock doesn't make up for the growth, but the fundamentals behind the company do. And that's why I first didn't add the price into the equation yet. We can see that ABBV has an adjusted operating earnings growth rate of 15.28%. And that's just an absolute stunning rate to have. And its current blended PE level is just 10.33. This is so undervalued at the moment, and it just has a dividend yield of 4.47, so it's just a banger. It delivers you dividends, it can deliver you growth, it's undervalued. And if I add the price into this equation, you can see that it is trading way below these 2 medians. So it's trading below the normal PE ratio of 13.27 and the calculated PE level of 15.28 when you take the price and divide by the earnings per share. And if you go here to the forecasting tab, you can also see that this is patent related, this slight decrease. I might cover that later on because a patent is expiring in 2022. But if you just go from here, where we are at the moment, towards there, it's just a price gain of 61.58%. And if you add the dividend to that, you will end up with 64.46%, and that's the expectation from the experts. If you do it for the 3 to 5 year growth, if you go from now to here, you will result with a total annual return of 10.85, and that's above the SPY. The SPY had a return of 10 including dividends, subtracting inflation, you will end up with 7, like I showed you before. But this is just absolutely stunning. It's undervalued, provides a huge dividend, 4.47, so they treat their customers well. Blended PE ratio of around 10 it was, I thought. And you can see here the S&P credit rating of BBB+. And that's just so amazing. And you can see here that it has considerable debt amount, but that's most of the case with these biotech companies because they put all the profits that they make into R&D, so research and development. So this is one of my favorite stocks, and I'm not saying to you that you have to buy this, but I would highly recommend you doing further research into this stock and just consider buying this one. The second stock I wanted to talk about is Air Lease Corporation. And Air Lease Corporation is a leading aircraft leasing company, and it is engaged in purchasing commercial aircraft and leasing them to its valued airline customers worldwide. And you can see the overall growth. So we take it all the way back to 2011 towards here. Of course, it had a huge decline due to the pandemic. No aircrafts were allowed to fly with people in it. And this is just opening up right now. In my country, we are able to fly in the summer. So these aircraft companies will get a major boost in a short period of time. And of course, don't keep aircraft stocks for too long because airline companies most of the time they do not even generate any profit, even when isn't any coronavirus going on. It is just difficult for these companies to generate any profit. And if you look over here, it shows us a dividend yield of 1.41%. This is not too big, it's decent, but this is quite interesting to see because in front of Corona, they offered a dividend yield of about 5.5%, and then they dropped it all the way down because they couldn't treat their shareholders well because they needed the money themselves. They needed to invest in their own company and their own people. They had to pay their loans, so they didn't pay their shareholders. So that's quite interesting to see. So this number right here, that 1.41, will increase over time. It's just a matter of time before that will go up. So that's just a major important part also to take into consideration. And the short interest, not too high, not too low, it's 3.91%. And short interest, it gained, of course, in the pandemic. You see it over here. The shorts are pulling away because things are opening up at the moment. So it might be a good time to invest. I'm not saying again you have to invest, but it might be a good time to take this into consideration. And you can also see this at the news. Earnings miss. Air Lease Corporation misses EPS by 26%. Nothing too big. They don't generate anything at the moment. The airplanes are just sitting still there, not being sold because nobody wants them. Nobody ain't flying at the moment. So you place this stock Air Lease Corporation into the industrials. It has a market cap of 4.92 billion, and it has a forward PE level of 9.9% times its earnings. So that's very low. 9.9, it's under 15, so it is considered undervalued. And the total return this year, that is, I cannot see the date, but I can see it over here. 3 months return is 2.21%. It's just not too big. And if you look here at the what's the ticker again? I forgot the ticker. Just AL, okay. Airlease Corporation, and if you go to revenue growth, we can see a huge decline. Oh, it's not even that huge. We see a small decline from the coronavirus onwards towards now. But before that, they had a very... Thanks, Siri. They had a very solid growth in revenue, so only a small decrease from here, but that's just normal. That's to be expected. And yeah, you can also see here it's just total revenue is just slightly decreasing. Here they were very new, and if you get bigger, if the market cap gets bigger, it is more difficult to generate any huge numbers over here. So that's also not very weird. It's just normal to see that. And just for the sake of this video not being too long, I will only cover AL right here in the portfolio. If you want to do your own due diligence on the other stocks, just use this fast graphs program. It's very useful. I use it all the time myself, and I would really recommend you using this. Yeah, you can just really you get a really good view of the fundamentals correlated with the price. So AL loaded up, so you can see we are trading over here at the moment, which is a price of 45.5 approximately. And if you take this and go to where it is expected to grow, you will end up with a total annual return of 32.1%. And this is just, so if you go here to the forecast, yeah, this is what I thought. So from 21 onwards, it will just continue to grow because it fell during coronavirus, and it's expected to grow after that. So if you measure it from here, the price right now to the stop line, or just take it to the median even, more realistic. You will end up with a total annual return of 41.78%. That's just stunning. Those are just stunning numbers. And like I told earlier, this dividend yield will increase when things are opening up in the world. And this stock at the moment has a blended PE of 9.32. That's just stunning. It's, oh, I am mistaken, 10.73. That is still amazing. And of course, these debts, they increased due to the virus that's going on. They have to pay back what they got from the government, etc. And it has a BBB rating from the S&P credit rating. That's decent. Market cap of 5.19 billion. Yeah, I would just recommend you looking into these numbers more, looking into them yourself. And yeah, just take these to the median in the 3 to 5 year growth, and you will end up with a 32.85% annual return according to the analysts. So yeah, just look into it yourself, do your own research. I'm not saying once again you have to buy these things, but just consider looking into them. And like I told you guys, I don't want this video to be too long, too boring. So I already see that it is over 20 minutes. So I don't want too long videos. So just check out those stickers. We have done ABBV, we have done AL. Just search those tickers. They are all amazing. They trade all below this maximum PE of 16.21, which is just absolutely stunning. Most of them are undervalued. And you consider a stock undervalued when it is below approximately 15. And they all have a decent dividend yield, with ABBV leading the dividend yields column with 4.47%. And yeah, they have just awesome forecasts, and most of these stocks are into the healthcare sector. You can see 4 of them are, and this sector might also just get a huge boost by the Biden plan. He might spend loads of money on this, So just look out for that. Financials, always amazing stocks into the financials. And one more thing about ABBV. You might be a little Warren Buffett fanboy like me. He's also invested into ABBV, so that just might boost your conviction on the stock, maybe not. But that's it for this video. If you have any more questions, just leave them down below in the comments. I like to help. I will answer them. I will try to answer them. And if you'd like to see more research on these stocks that I mentioned here, also comment that down below. I will try to do my best and make a video on them. So thank you for watching and see you at the next video. Bye.